Hello everyone, this is Yavuz from Bayford Analytics. Today I'm going to show you how to survive in bear markets in any markets. Actually, it can be Bitcoin, it can be commodities, it can be any market, and how to survive in bear market with a moving average strategy, DCA strategy actually. So, actually, we're gonna combine DCA strategy and moving averages, and I'm gonna show you how to where to sell and where to buy. What are the key levels to buy actually in a bear market? So in Bitcoin, as you can see, I'm using logarithm graph in long-term graph. So we had one and two bear markets, and we lived third one after 2022. And right now, I'm gonna show you how I survived in that market situations. So first things first. In moving averages, while we're putting moving averages, I put RMAs. I don't think that SMAs are working well because they are working so laggy. I think that's why I'm using RMA in the long term, slow ones. So I'm using RMA 200 and 250. I'm using 200 and there are two RMAs because they're making some kind of channel and I like the way it looks. So that's the key thing that I'm using too. So if you look at that, there's in 2015 there are two wicks that touched to RMAs, and in the COVID time there's one wick that touched there. Okay, so right now I can by looking at them I can see that the lowest point when a bear market starts, the lowest point is gonna be that RMAs. So right now in that bear market I spotted my lowest point by looking at that, my dip point. So, and another moving average ribbon is gonna be EMAs, and these are gonna be actually standard default EMAs, which are 20, 50, 100, and 200. All right. So I just changed 200 to 17, and because it looks and it works better, but most of them are same. So let's start showing you what did I do, how did I work out, how did it work out. So when we play that, when Bitcoin goes bear scenario, it started breaking EMA 17. Okay, start breaking EMA 17, but we can't say that it went to bear scenario if it broke first EMA. We always wait for second EMA to break. All right. When second EMA is broken, we're gonna think about that. It's really serious situation, and we start buying the dip. So here, if you can see, we broke the second EMA, which is EMA 50. Right now, I'm looking forward to buy at EMA 100. Here, with my 20% of my capital. All right, I'm gonna buy 20% of my capital. Okay, let's start. Here, EMA 100, I'm gonna buy if it touch exactly here. Let's say I bought. Right now, what is my strategy? My strategy is DCA, which is dollar cost averaging. So every time when it dropped another, when it come back to like another EMAs, I'm gonna buy, and when it starts going up, I'm gonna sell in every EMAs. So let's say right now I'm looking forward to sell EMA 50. Okay, sell 20%. That 20%, I'm looking forward to sell it when it touches. Right now it didn't, but right now it did. All right, so I sold that. Okay, and after that, I remember that in probably in April 2022, it should be, there was a fake out. I remember that because, as I said, I'm only telling that that's the fake out. I'm only telling what I did in the bear market. So right now we're gonna go down more. So when it break that, since there's a it didn't decide where it is gonna go, so I um decided to not to buy or sell anything, just wait what's gonna happen, and it's going down. So I'm gonna buy uh, some Bitcoin with 20% of my capital when it touches here. All right, that's my exactly touch there. That was my strategy. Then to sell here, as I told you, like I'm buying EMA 100, I'm gonna sell EMA 50. Okay, but things are gonna change when EMA 17 is dropped under EMA 50. Right now, I'm gonna look to sell EMA 17. Okay, that's gonna be my strategy. But since we break, as you can see, EMA 100, right now, I'm gonna delete that and I'm looking to buy another 20% here. Okay, so exactly here, as you can see, it filled the order and it's continued to do more moves. But since I was planning this level to be dip, I could have actually buy 40%, but I didn't because I knew that they're gonna pressure the Bitcoin more and more. So maybe RMA 250 can be an opportunity for me, and which I actually bought, and I've seen that I bought here 40%. I was looking to buy at least 40% of my capital. So what happened? Let's see. As you can see, it's getting more and more pressured. Let's see that. So it's again at least 3 times rejected from EMA 70, exactly right here. We saw that level. After that level, look, I bought here. Let's delete these because these are filled. I bought here. I bought here, and I bought here. So my average is some kind of here or something. Actually, these yeah here then some kind of here because I bought 40% here. Some kind of here. Okay, and let's put a horizontal array here. Some kind of here. I'm just right now just giving you an example. What am I doing? So right now I spent my 80% of my capital. Okay, and I had 20%, which I just in case leaving always. So right now I was waiting for it to go up, which actually happened. Right now you can plan to sell here if you want, or here, or you can wait like me because I think that right now we finished bear market. We're inside of a bull market, so as you can see, it started going up, and right now we are at here. As you can see, we're at here, and still I didn't sell my bitcoins, and I keep them still. And after that point, since we're in bull market, these moving averages only gonna be a pullback by zones, which are gonna be, let's say, EMA 17 and 50. When Bitcoin pulled back like that, like here it did, it went up, then pulled back. Here you can buy, then when it goes up, you can sell, then it's gonna go up, then go go down, then go up again. So these are gonna be pullback zones. Be careful about them. But as I said, in the bear markets of the markets, you can use moving averages, and that's so easy to find how to buy. How to find the key zones to buy. So let's look a couple more things like assets to buy. Let me remove exactly right here. Let's say right here I have gold. Let's say I can work like uh, here in that zone, especially how to define like these zones. These are easy to define. Exactly. Let's say right now, like gold always been over that zone. Okay, always been over that zone. So that's especially EMA 50 was so key level to buy. Okay, and then it became EMA 100, which actually you could buy here and sell there. Okay, then when it dropped, fell down here, you again could have buy actually. Then you could have sell here. When it go up and did a pullback here, again same thing. EMA was so important. Here you could have buy. These things are so important in, like, you can use them in any other tickers. Right now that's a gold ticker, and you could have used that in any other ticker maybe. Let me look in natural gas. I don't, let's say here, yeah, like that's Brent oil. So we went up here and then down till that point. Okay, you could buy here because it's gonna go up, then sell here, then when it goes down, that's a buy point, then sell here, then it went down again, buy point, then sell again. Same thing about here too. Look, when it go down, that's a buy point, sell. Did it break it? Let's say you bought it because it's gonna go up, isn't it? But it didn't. It went down till here. You can buy here too again. So you made your average here. But then it went up till here. So you can sell here. These are important things, important levels. Right now, Brent oil is like that too, like in a range kinda. So when if it breaks here, it's so obvious that it's gonna do pull back and go start to go up again. And these that area is so important area for Brent oil too. So yeah, that moving average strategy is nearly always working. So you can try that mostly in weekly time frame. I at least right now recommend you, but definitely you can use moving averages in while scalping too, just to make sure that you did a check and everything like that. Because it's changing the style, the strategy can change in lower time frames. So that's pretty much it, actually. Thanks for watching. That's what I was gonna tell you about, and yeah, see you next time.